Good morning, ladies and gentlemen, and welcome to the Coffee with Craig show. We'll be talking about commercial real estate in Central and Eastern Europe. Good morning, ladies and gentlemen, and welcome to the Coffee with Craig show. We're following up on our two panels that we did during the CEE Retail Awards that happened January 27th at the Intercontinental Hotel. During the forum, we had two great panels, which we're going to show you the first panel now, which was really investment and development for retail. Great lineup. I mean, Immofinanz, Master Management, WP Carey, so a lot of investors, also the Trei Group, developing shopping retail parks, EPP, also one of the biggest retail owner in Poland, NAI Ukraine, bit about the Ukraine model there, and Atrium European Real Estate. So really the top guys, the owners, the couple of the retailers, the developers, all talking about how they see the market, what's happening on the investment front, development front, and just the overall sector. Now we'll do a quick 30-second commercial about our next event, which is the SCE Awards being held in Romania, and then we'll shoot straight to the panel. Very interesting stuff. Welcome to the 17th Annual Europa Property Southeastern European Real Estate Awards and SCE Forum, held March 31st at the SAS Radisson Blu in Bucharest, Romania. With the most active international, regional, and local investors, developers, and property owners attending, this event continues to be the single most important in the region. The deadline for nominations is February 24th, and with seating limited and the Radisson Ballroom quickly filling up, now is the time to reserve your sponsorship package or corporate table. Good morning, ladies and gentlemen. Good morning, gentlemen. Sorry, no ladies on the thing. Paul, I'll give you the microphone. Maybe we'll start with you. And everyone, I know you just introduced yourself, but just introduce yourselves again, and then we'll kick off the panel.
Hi, everyone. I'm Paul Kuśmierz from Master Management Group. We're heavily involved in retail, development, acquisition, all facets of it. We've developed over 500,000 meters in our history. We currently have 150,000 under management.
Good morning, Jacek Wesołowski. I don't know how this happened that I am probably the oldest developer in Poland because I started in 1990 by developing Cliff Shopping Center in Gdynia, just now doing retail parks for Tengelmann Group, for company Trei. We have just now 29 projects opened and we are heading for another bench up to 60 just now. We are saying probably it will be 80 as I see just now, and we will go further into PRS probably as our second leg. This we are just now working heavily. Thank you very much.
Liad Barzilai, I'm the CEO of Atrium. We run shopping centers in CEE, €3 billion portfolio throughout Poland is our main geography. Now looking to expand into PRS, we announced the strategy of creating a €1 billion portfolio of PRS in Poland. Broke ground on the first few hundred in Warsaw and announced a couple of transactions. So we are on the track to getting to the 5,000 unit target relatively quickly.
My name's Tomasz Trzósło. I run EPP. EPP is mostly invested in shopping centers in Poland, but we also have a few office buildings. And the structure of the company is a listed company, listed in Johannesburg in South Africa. And vast majority of our shareholders are South African, but the company is having assets only in Poland.
So hello again, Dietmar Reindl, Immofinanz. We are a commercial real estate company. We are stock listed in Vienna, and we have about 2.2 million square meters of properties in 10 countries. We have 50-50 office and retail. In retail, we have two brands, Topshop and Vivo. We have 10 Vivo shopping centers, and we have already 100 retail parks in Europe. We had market entry in Italy last year, and we have a very happy team there. It was a big competition for the jobs because we're sitting in Milano. And we are having now under acquisition 25 retail parks and under development another 25. So we are targeting 150 as a next step.
Hi, Karolis, represent WP Carey. WCare is a global net lease REIT, been around for 50 years, investing in Europe for 20 years. In Europe, we have roughly 5+ billion euros of assets. Been investing in Poland for many years as well. Recent deals include acquisition of portfolio of Obi stores that we did on 15-year lease. Other retail deals in Europe that we recently did include a portfolio of Coop stores, portfolio of Eroski stores, portfolio of casino stores. So quite a few things. Our focus is long income, strong credits, net leases. So keen to do more here to discuss.
Right. And which countries are, let's say, hotspots for you guys these days, or is it more sector, or does it matter?
We chase yield, so we go anywhere we can find deals. So the recent deals include in Poland, Denmark, France, Spain, so all over the place.
Right. Equal opportunity investor, yeah?
Absolutely.
Okay, great. So let's just start off as we're kind of developing this this panel. Let's just start off with how the company or how the shopping centers are really, let's say, embracing or fighting the kind of digital revolution. And this would be to all the, let's say, shopping center owners, maybe one at a time. Just what is happening on that part? Are you building platforms for the shopping center? Are you letting retailers doing it? Does it matter to you? Where does all this kind of fit in? Maybe Tomasz, you have the biggest chain to deal with. I mean, do you handle it differently between the different shopping centers because of size, or how do you try to handle this? And maybe what is the budget to handle it?
So it's quite obvious. It's the trend that can only be stronger, and there needs to be certain accommodation of this trend. And clearly, various landlords will do it to the various extent at various speed. But in my opinion, it's unavoidable. And we, in the company, we looked at various options. We looked at running our own marketplace as an example. We're not pursuing it at the moment for various reasons, but then it would be just getting into competition. But what I believe, and we believe in the company, the right way for shopping centers is famous omni-channel, i.e. Various channels of reaching the customers. And in practice, I believe retailers will require physical presence, but they will become stronger and stronger in online as well. So the future is the right combination. And there could be various technological ways of doing that. Significant cooperation with the tenants is one way. So as you work together for them to use the shopping centers as one of the sales channels. And then if the right system is designed, then online is no longer a competition. And I believe this is the future for shopping centers. So online is not a competitor. Online is just one of the sales channels. And maybe the final thing is that there could be various ways of people buying their goods. Probably more and more research will be done online. And then the trick is how do you work with retailers in order to get these researchers to try things in the shopping centers and maybe to buy a little bit more. But I think it's in the interest of retailers as well, because the current model of sending back a lot of goods and couriers going back and forth is not sustainable. Not sustainable in terms of ecology, but also not sustainable financially. So it's in the best interest of retailers as well to find the right balance between online and offline.
Mm-hmm. And Paul, you own some shopping centers, but you're also managing some. So I assume you've got to convince the owners to, what are you convincing them to do on this phase? Because of course it costs them more money to invest in the online business, I would imagine.
Well, we only manage centers that I have ownership in.
Okay, so it's easy for you to convince you.
My other people to spend our money, but I do have partners in the malls, and it's a big discussion, and everyone has many different ideas. But I think Tomasz hit on something. Is we work together with the tenants to find a way somehow to market, to drive people into the center. As much as everyone in online is growing, still over 80 to 85% of the sales for most of 90% of our tenants are brick and mortar sales. So as much as internet is growing still, and that's why these retail parks are being built all over the place, and we can talk about that, is people still like to go and touch it and feel it. It's going to be changing over time, and it's happening very quickly. As in the Ukraine, their sales there are increasing. I'm interested to see what they're doing. Yeah, they're building these big malls, which we built in the last few years, and which is becoming challenging because of the COVID situation. But again, we have to work together. There's a lot about it online, and I think no one has the perfect answer, but it will come together. It has to. The tenants need the brick and mortar, and obviously we need them. So we'll find a way to make it work.
True. I mean, it seems like the guys that are, and also the news are really just a handful of the retailers that really have super sites for e-commerce, right? They can handle that business, and everyone else.
I would just throw in one thing. I don't know if you read about it, but Amazon is opening its third brick and mortar shop now in San Diego. So they're the largest online sellers, and they're opening up physical shops. So that kind of telltale sign of something.
Right, exactly. Jacek, we'll go in as Paul mentioned the retail parks, and I remember 8 or 9 years ago at our event here, I remember some of the big shopping center developers were like laughing, oh, those guys are doing something. And I would say there's less laughing now and more, wow, this is becoming this is for the past few years, but obviously the last 2 years of kind of a whole new business, yeah?
No, yeah, I've been blamed that I'm building some kind of sheds all around Poland and polluting environment by ugly houses. Just now, nobody cares whether they're ugly or not, but they are doing really good business because we have a lot of synergies between e-commerce and actually retail parks. I don't know whether you are aware that our costs for tenants are much lower, not because of rents, but because of service charge costs. We are able to lower service charge costs down to €1.5 per square meter. That's why retail parks have like 4 different roles to the market. We are like storage for this tenant. We are like, of course, selling place. We are like a showroom, but we are also like a place where people who click and collect things, they are collecting actually from retail parks because we are closest places to the living of people. We are pretty long time open, so it's solving big problem how to collect things which are clicked. This why I would say e-commerce is one of the engines which is now speeding up process of development of retail parks. And some years ago I thought this will go maybe with development possibility for 5 years. Today I would say another 5 years. So the scale of possibilities is growing every year.
Mm-hmm. Okay. Dietmar, tell us a little bit. I mean, I think most people know about your chain. This is a stop shop, but also tell us a little bit more about the new concept, because I was reading just about that you're launching this new concept, and how do you see that playing out, and how are Top Shops doing throughout the region?
Yeah, so our Stop Shop brand is actually our strongest brand. We started in 2015, or when I started 2014-15, we had around 34 Stop Shops in 6-7 countries. Today we have 100. And I think we are even market leader in Europe with this size. And we, as I mentioned before, we're aiming for the next, in the next step to have 150 Stop Shops. And during COVID, we had some time to think how this business will continue. I will maybe only a short comment regarding online. I think the only thing, or the one thing we should be really concerned is that we're not losing rent potential because it's going to online. I don't care about online, but the point is that the more turnover is done via online, the less income we will have in the future. So we have to somehow, as landlords, try to get into the living rooms of the consumers. But that's a maybe too long topic now. But retail parks, and then we had some time to think what is the real important trends in our society. And we saw that housing, the living costs are becoming more and more expensive. Vienna, Munich, all these cities. And we saw as well the ESG topic becoming stronger and stronger. And out of all these thoughts, we developed what we call Top on Stop. And this is, we are doing on top of our retail parks, in a modular wooden construction, we're doing affordable apartments. We're doing it sustainable. There's photovoltaics, there's geothermal our storage of the energy, and this we are planning for 50% of our portfolio, and this means this is 12,000 apartments during the next 4 to 5 years. And this is a sort of say densification, and we are as well reducing the energy consumption in these buildings because of smart technology, and it's sort of say our contribution to the ESG topic in whole Europe at the moment.
Okay, great. And having said that, Liad, let's just jump to you about the residential. I know you mentioned PRS earlier, but kind of in the Polish press, you were destroying all the shopping malls and building residential, which we know isn't exactly right. So if you could kind of set the record straight of what you guys are doing with some of the shopping malls and plans to remodel them and add in, I think, residential, yes?
So don't believe everything you read in the press. I think that's
no.
From there. But misquoting is.
Well, I saw it on Facebook, so I assumed it was false.
Yeah. Okay, that's fine. So we're not demolishing our shopping malls, not at all. I think we strongly believe that, first of all, what everybody said about e-commerce, I completely agree. The one thing that we believe in and was not said is, I think, shopping centers. Location will prevail, and with that location, what we're trying to create is ecosystems around that, so live, work, play, to feed into our shopping malls. And I think that is the one thing that will, like Dietmar said, will help support the malls and will help create an attractive environment also for the residents. So that's basically what we're trying to do. Each mall is different, so what you read is really not true. Each mall has a different plan. It will take time to develop those plans, and it will take time to redevelop those assets. But the idea is to create 10,000 units basically over the next 5 years in and around our assets to strengthen them. So that's the idea.
Well, it always helps to have people live there, right? If you have another 10,000 people living there, they're bound to buy more from the retailers, I think. Great. Okay. Paul, let's just jump back to you for a minute. Tell how, because most of all your shopping centers are in the regional cities. And sometimes I'm hearing, the regional cities are doing well because they're getting this plus 500 or some other options and sales have won up. And other people are saying, the regional, we can't go there for whatever reason. Can you give us a little, let's say, outline or outlook for also for the future?
They've always performed very well, but I think what was interesting, I guess, during COVID the past 2 years is they kept doing very well. They bounced back very quickly. The people were used to going there, and they kept coming. So, we have regional dominant centers, and they performed very well. We had some tough times through COVID. It was 2 years. It was tough. We had our occupancy rates going on about 83%. We invested hard, and we're at 99%. And I think that's again, another good sign. But our turnovers have continued to increase year on year, and it's a focal point for the people. I think they like to take a trip to the big city, to the big malls, maybe once a month from our studies. But the rest of the time they're visiting our malls 2-3 times a week. It's a focal point. Either it's going to the cinema, it's going to the food court, it's a place to be seen, a place to meet, because there's not a lot of opportunities in these rural areas to do those type of things.
Right. So the competition for time, you're kind of leading the way in those regional cities.
There's a lot. The dwell time is after COVID, it's decreased, but it's still around 65 to 90 minutes.
Yeah. Okay, good. And Jacek, we were talking about, let's say motivating shoppers to come to the shopping mall. So, I know when you were first building the retail parks, they were pretty straightforward. And now I understand you guys are adding some more attractions like play area for kids, things like that. Is that, or what other kind of things are you adding as, let's say, leisure to attract people to come?
This direction, I would say, it's maybe not preferred one by us, but what we see is that many tenants who are actually just now present only in the inner city shopping centers are also willing to open their stores in retail parks. So we have actually now much wider group of possible tenants than ever before. This COVID was somehow proving that this simple model without common spaces is somehow COVID resistant, and we've been not forced to close down our projects. And suddenly we bring some habits within local societies that they can always meet us open, and this loyalty stays just now. So I remember that I've been going after Marek Piechocki from LPP, I don't know how many years, please open something for retail parks. This is nothing for us, we are not retail park tenants. Just now, I think Sinsay is probably one of the best stores of the chain. And this knowledge is more and more known for tenants, and we see more and more tenants who is willing to open with us, and that's why we are ready to open our projects bigger. Not to say that part of our family is Obi. Obi also came to conclusion that Poland still has some potential, so we have now like 3 projects which we will open with Obi, and Obi alone is 10,000 square meters of rent, so that's why our Stettin project is like 30,000 square meters, so it's not a small project anymore.
Dietmar, are you finding that in the region you're getting a lot more different types of retailers now looking more at your locations and your chain to move into? Is it opening the, let's say, opening the vision bigger for you, for your...
I think this process of understanding of retailers that retail parks are a good potential for them with less risk because of the low operation cost, as Jacek said before, has started before COVID already. I think COVID maybe has even accelerated this trend, but we have seen the first H&Ms, for example, already some years ago being not so easy with them in retail parks because they want design and so on, but still they opened with LPP. We have already, I think, 35 contracts in our retail parks, and this started before COVID because they need less turnover to make profit, because the costs are much lower, and this is now increasing. At the moment, I do not see so many new retailers coming to retail parks because most of them are already there.
Right, so you're ready, when you're ready to open a new one or you're ready to present a new one, you've got your hit list, and generally that fills it, yeah?
That's it, yeah.
All right.
It's a simple business.
Yeah.
I like it.
Yeah, exactly. Also, if we have any questions, please just, raise your hands, let us know, because we'll take questions anytime, of course, from the audience. So, Karolis, just coming back to, I understand if it's the right, the right margins, you guys will buy it. But what is, let's say, when you're having a, let's say, board meeting and you're saying, okay, what are we going to invest this year? What is our targets? Let's say, if there is any, what do you think you're going to do for 2022 with kind of projects? And I'm sure you're never asked that, and
We have volume targets, but we don't have asset class targets, so we don't have geography targets. So we only have certain number we need to hit to please our stock investors. We chase yield, as always said, and we scout the whole market. So I work in our European team, and we're responsible for covering European region, and we cover all the European countries and see where we can do something. And the things that we can afford as of late, typically, and the best things that you can do are grocery retail, which I think comes out as
grocery retail, yeah?
Yeah, which I think comes out as a complete winner from the pandemic together with the industrial sector. So I think industrial sector was the winner for sure, and grocery retail as well. And the yields are compressing significantly, but not as quick as for industrial, but they are safe. It's a very defensive sector. So that's why we've done quite a few deals in this segment. Last year we did roughly $1.7 billion of volume. Target for this year is, of course, more. Roughly half of that was in Europe, 40%. Am I expecting to do more than last year in Europe this year? Not really. I'm really worried about inflation. I'm worried. I'm a doom gloom guy. Negative. I'm worried about the Fed's raising rates. Of course.
Well, they just raised them today, right?
Yeah, but I mean, that's in the US, and I think that can happen in Europe too. Although I think in Europe not as quick. Of course, the Ukraine situation is making people anxious. So I think we can see some interesting movements in the market that should create a lot of opportunities for investors in the CEE region and abroad. So should be exciting, but I think you have to be very cautious.
So the grocery sector has been doing well. Now, is that because people weren't eating at restaurants and they're buying groceries? Is this going to go back at some point to where people are eating out more, or are they just plain eating more? I guess you guys would analyze all that stuff before you buy something.
I try to eat less, but I think it's an effect of the pandemic and the effect of people working more from home rather than in the city. and people who don't commute to the city, they don't go to restaurants as much, so eat more at home. And I think there is a global shift to more and more people working from home. And even though I think a lot of countries are reopening up and saying go back to the office, and even though some employers initially resisted and said everyone will have to be back in the office from a certain date, there was so much push from the employees that now a lot of companies saying, okay, fine, we're happy for you to work, 2, 3, 4 days from home, and majority of people are choosing to do that. And so I think they will continue to buy more groceries for the home delivery. Of course, people will say, oh, the risk is online deliveries, but I think that is still very, very small part of the grocery retail. I think it's less than 10%, maybe even less than 5% for certain countries. So I don't think that poses a risk. It's an extremely defensive sector, and we focus on small format grocery retail stores in densely populated areas where there's a lot of residential build-up around it. And when we do retail transactions, we always do a very diligent site-level underwriting. So we always look at every single store, how each store is performing, if that store is generating enough rent, enough EBITDA to cover rent at least a couple of times, so you're certain that you're doing a good investment because you know the performance of the store. You would never buy a store blindly. So that gives us comfort underwriting.
Okay, great.
I'm not sure if I answered your question.
Absolutely. So yeah, again, any questions from the audience? Definitely just let us know. I think these panels are going fast. I think because we have so many people on them, but we'll have to wrap it up in just a couple of minutes. But what I want to do is kind of go through and get everyone's sort of opinions, pearls of wisdom for 2022, 2023. How you see things going? Any last comments and angles that we've got to approach and that we should talk about now? And Paul, maybe any kind of pearls of wisdom, anything to, let's say, slowly start wrapping up our panel.
No, I think in general, it's focused on retail, what the panel is about. I think you're going to continue to see a lot of retail parks being built there in the planning, but I think you'll start to see a little bit of a change, and you'll see what I call a hybrid. Mm-hmm. Well, there will be an area where you walk in, and maybe there's a food court there with a cinema attached, so that people can dwell a little bit. It's great pulling in and out, click and collect, but in these smaller cities, I think you'll start to see a little bit of change. Maybe Jacek will even institute it. Well, there'll be an area where you can go inside, but we're still keeping that service charge low. And also for the big guys, the big shopping malls, I think they're going to continue back to the pre-pandemic, where they're going to be looking to put proper entertainment and leisure. We've heard that big keyword, and what does that mean? I think these guys are doing it in Ukraine. You saw with the additional huge areas of entertainment. And I think as everyone's coming out, these bigger guys are going to need to put something in, and I think there'll be some big announcements in Poland as well.
Yeah, I mean, in the Vitalii shopping center and these Mandarin malls, I mean, there's roller coasters in them, so they bring the kids there for birthdays and all kinds of stuff, and I'm sure they're spending a bunch of money there as well. Yeah. Okay, Jacek.
Before I say about Trei plans, I have to say I have to support very much Dietmar Reindl. Actually, I've been saying it 3 or 4 years ago that it have to come some kind of agreement with tenants that this e-commerce have to be also partly given to landlords, because this what happened now, lack of this agreement made market completely unable to build new inner city shopping centers. Economy is so poor and incomes are so unpredictable that any bank, any investor will invest into this direction. And this is also common knowledge that stationary shops will not survive without e-commerce, but also e-commerce will not survive without stationary shops. As examples of Amazon, also from my group, we have to open stationary shops because this is giving some strengths in e-commerce. If we talk about Trei, for us life is simple. This what we started works. Why we should stop it? We have now a pipeline for, like, I would say 3 years ahead to build new retail parks. So we are building just now not less than 7 of them a year. Last year we made a record of 8 + 1 rebuilding, so nearly 9. And this we would like to keep going as long as possible. We see our second leg in PRS, so we feel this potential is there. But we are also selling apartments. Just now we are on the level of 400 apartments a year we are selling, and this speed we would like to keep, and we will never resign from this market also. While today you can sell more or less everything what's available, so market is extremely good. So that's our plans and that's our strategy. Actually, nothing special.
Right. Yeah, and I mean, in talking to a lot of the retailers, especially the fashion retailers, they have said if they close their bricks and mortar stores, and they're in a great area, and they're doing everything online, and they think this is great, they close the bricks and mortar stores down in that area, and sales drop 30%.
This is extremely unfair. I know that this kind of agreement will be very difficult, but it somehow must. It's no other way. It's for common business finally. Okay, e-commerce will resign from some of the incomes, but if they will not resign, they will lose this market because of lack of access to stationary shops. But someone have to be brave enough to start this discussion.
So how do you think that will go? Will you just charge more rent per square meter? I mean, I don't see a lot of retailers wanting to give their online sales. That's the business. But that could be, yeah, exactly. Just, I mean, it's just easier, right? But how do you see
But
that?
this is not so difficult in the end. Mm-hmm. It is now measurable what kind of catchment is creating stationary shop in e-commerce. We are already in retail parks able to measure what kind of turnover will get a store out of stationary shop and this e-commerce which will come additionally to the store. If it is possible for such simple tool like retail park, for sure it's possible for inner city shopping centers. And it will be big pity if this will not happen, because whatever will be done around inner city shopping centers will be financed out of investors' pocket, and this is not too popular for them.
No, I'm sure they're not happy. They're not voting yes on that, are they? Okay, Liad, any final comments? And how do you? And also, then, how do you think the rents will go? Will you just charge more, or will end up being someday a percentage of the online sales?
I'll maybe leave that one for Tom.
Oh, okay.
Because he's the biggest, and he can.
Yeah, right. He can demand more things. Okay.
But, just in terms of, first of all, the outlook, I think retail is definitely not dead. Physical retail, you see. And I'm sure Tomek will support this and everybody here. We see sales rebounding back to pre-pandemic once everything stabilizes. And I think that's the basis for our business, which has definitely not been flavor of the month. I appreciate that retail parks are flavor of the month now, stable, efficient shopping. But people also want experience. And when they will come back to living their normal life, they will also want to come back to having the experience, the dwell time, enjoying. We will need to adopt, create that experience, and shopping will come back to these shopping malls. As I said before, it's also a matter of location. Not all the malls will come back in the same way, but we strongly believe that good locations in strong cities and urban locations will definitely rebound. So that's how we see it. On rents, the challenge for the teams is to grow the rents. I think that's basic.
Exactly.
And if you're asking about turnover rents, clearly we are not. I guess everybody here is not supportive of that. So
okay.
I think that's easy.
Well, a couple of things maybe from me. I fully agree with what Liad just said on the big shopping centers. There was a lot of talking about the retail parks and the reasons why they are developing, and there's still some development space. The good situation in Poland, or perhaps wider Central Europe, is as well the saturation of the market. I'm not a fan of new development of shopping centers, and I'm quite happy that the banks are not too keen to finance it, because I think the job is to get through the COVID and do some asset management work in the bigger shopping centers, in the bigger cities, exactly with the entertainment, create the places for people to visit. And I fully agree with Liad, this is the future for them. And actually one of the things supporting the relatively positive future of those shopping centers is that it's unlikely to have new big malls coming up as competitors. Ukraine is clearly a bit different, but Central Europe, I do believe, will not see much, if any, of big mall developments in the future, which actually is good for the market, allowing it to stabilize. Second thing is also on the capital markets. The big thing is industrial is now crazy on the yields. PRS is on the way to become crazy. Retail parks, groceries are also getting more expensive. The big shopping centers have done a bit of journey in the opposite direction with the yields going up. But it's only a matter of time, assuming there's not going to be much being built. Also for global capital, there's a lot of money in the world to start appreciating the well-located, well-managed shopping centers for a very simple reason. You may have some tenants replacing, but there's going to be other tenants, there's going to be new brands, there's going to be some tenants growing. So it should be, in a post-COVID stabilized life, much easier to run a relatively stable cash flow as opposite to big logistics or single tenant projects, including groceries. Because if you have an issue there, you have a significant vacancy that you have to deal with. And of course, then it's a quality, it's a location, etc. It's manageable. But I think in post-COVID stabilized world, it should be easier to manage a well-located, bigger shopping center in the city. And capital will start appreciating this again. I'm quite sure of that.
Okay, and Dietmar?
Thank you. I have 3 topics for this year. One is growing up our portfolio in markets where I think we are still market potential for our retail parks, and this is Italy and Croatia. We're having there a lot of projects. Second one is the densification in existing properties and creating, like you mentioned before, living places on a maybe not too posh in our retail park, but more smart and more convenient for the people. And the third one is what I mentioned a bit. We have worked now for more than 1 year in creating some kind of online cooperation with our retailers, where we are trying to get closer to the living rooms of our end consumers, of the shoppers, and building the bridge between our decentralized retail parks and the consumers. And this will be a hot topic for this year for us.
So when you say getting into their living rooms, is that more through TV or online advertising? How do you get to them?
It's an app called Stop Shop Wallet, where consumers can buy selected products of Stop Shop retailers at home. And first step is click and collect and in the Stop Shop, and second phase is delivery. So we are trying to support retailers who are not in the online business that much by creating some logistic offers for them and by building the bridge as a landlord between the Stop Shop and the consumers. And we are in extremely decentralized locations. We are in Eastern Slovakia, we are in South Serbia, so there is no Amazon there. Yeah? So that's our big potential also in terms of getting to the rent potential of the online business.
And so if you have, say, 10 retailers and 1 or 2 of them are really big and have great online stores, are they also joining the app as well? Are you able to integrate their system?
That's the actual discussion, but on the long term, they will use parts of their retail park stores as some kind of logistics area where I expect they will try to be part of this party and using, with not all, but some products, this potential we are offering to them.
Mm-hmm. So promoting it as last mile, really, to get them coming in and picking
exactly.
It up. Okay. And Karolis, we'll kind of wrap it up here on the investor side. It's always great to hear from people putting in their own money directly or indirectly. What is the feeling of investors now? I'm sure that with interest rates going up, as you mentioned, and inflation, what seems to be the direction that they want you to go or that you want them to go?
Buy. Buy more. No, sentiment is always just go and buy more and grow. And obviously you try to navigate the market and make the most of it. But I would like to make a couple observations. We don't obviously invest in shopping centers as we do single tenant investments only. And of course, I cannot participate in some of this discussion. But it's interesting how some investors prefer multi-let assets while others prepare single-let assets in terms of the risk perspective, where you see multi-let asset as a less risky because, if one tenant goes, you still have 95% pre-let asset. To counter that from what we do only single-let investments, single tenant assets, but we focus very much on the credit worthiness of a tenant. So for example, if you do a deal with OBI, we have a OBI parent company from Germany guaranteeing income for 15 years. So the risk actually...
Little closer to the, I don't think they can hear you. Yeah.
Yeah, so I say that the risk actually is a lot lower than some people might think about single-let tenants.
Because if the OB goes out of business, the German, like, they're not big enough, but then the bigger company pays the rent.
Yeah, so I think either someone else takes them over, which I don't think they'll ever go out of business from what I'm seeing, from where I'm sitting. But so that's one observation. So I think it depends from the seat you're sitting in and what risk you're perceiving to be significant to your investment strategy. The other thing, while I cannot comment on shopping centers, which is not my specialty, but I think if you assume that the sort of CE region and Eastern Europe region is growing and maturing and is going to become what the Western Europe is, if you look at the Western Europe and what's happening there with the shopping centers or any sort of high street retail, if you go, for example, to a Zara or H&M or any of the stores in London, the largest queue is the returns queue, not the till to pay. So I think there's definitely some transformations happening and all these retailers are adopting. So I think you really have to think outside of the box and look into the West if you want to succeed in this business. But, you know, that's not a 1 year change, but I think 5 to 10 year change probably to catch up. The final observation, I think, is just, I think I would like to encourage, and I think definitely retailers are doing that, is utilize, while the market is still hot, while even though the anticipation of the raising rates is there, the rates are still at the record low levels. And while the rates are low, you can monetize the real estate that you have and do a sale leaseback. Because once the rates start going up, the prices will go down. So if anyone wants to do a sale leaseback, this is the golden opportunity to do it now.
This is their lucky day to meet you. Got it.
Yeah. Craig, maybe I will add just one more thing on this turnover rents discussion, which Liad actually referred to me. My view there is simple, because I haven't answered that, I think. That I'm a fan of valuing the space on how successful shopping center is in attracting footfall, in attracting people to visit, and then build up the rent on this basis and totally drop the turnover rent discussion. Retailers trying to, deal differently with how much they show associated with the specific shop, etc. Maybe there's solutions, as Jacek was alluding to, maybe there's not. I think the simple way is like in office, you come as a tenant, you have a better location, better building, etc. People want to work there and not elsewhere. You are able to attract higher rents. And I think perhaps the future is that kind of simple. You have a better shopping center, better located, you attract more footfall, and you price your rent on per square meter basis accordingly with potentially huge differences. Because tenants will trade more in online space, there will be returns. The history so far, unless this is captured, is that there were cases in COVID where the turnover reported to the owner of shopping center was negative because there were more returns. What do you do then? You give money back to the tenant? This is just crazy. Still the shop was very operational and handling a lot of customers. So let's see how it evolves. But I'm not against a more simplistic setting up of the rent based on the overall footfall in the shopping center.
Yeah, I mean the in-store sales are deceiving, right? Because they're buying it online and they're returning it to the store, simply, and then the sales are down. And Vitalii, to wrap up our panel and make some comments.
Yes, I just want to spread a few facts about current situation in Ukraine. Today, retail in Ukraine is very attractive from investment point of view for middle and small businesses because rents dropped down significantly, but sales haven't dropped. And in 2020 we had plus 6% increase of retail sales in the country, and now in 2021 we have plus 13% increase in sales. And that's why now if you invest in opening of some franchising shop, you can return your investment in 2, maximum in 3 years. And it is very popular. It's first. Second, we are not constructing retail parks a lot because level of urbanization in Ukraine is high. We have few big cities, Kyiv, 7 million people, 1.5 million people, Kharkiv, Odessa 1 million, Lviv, and so on. We still constructing big shopping centers unique situation in Kyiv where landlord collected the best land plots in the city with near the metro station during 10-15 years, and now starting its construction because location is better than in any competitors, but it is not the main trend. The main trend, of course, now residential real estate is a king. Of course, our main clients, as for consultant, are residential real estate developers. All of them trying to construct self-efficient districts, 15 minutes neighborhood, and of course with all infrastructure, retail, F&B, educational, and so on. And that's why now the most interesting and attractive type of real estate is a neighborhood shopping center. But sometimes in suburbs it can be in retail parks too.
Okay, great. Well, with that, we're going to wrap up our panel. I would like to thank everybody. Thank you very much for joining the panel, and I really appreciate your time and effort in coming out and doing it. And if we can get a round of applause for our panelists, thank you very much. We'll take a little break. We still have lots of food and coffee. We'll start our next panel at 11:15, also covering a bit of logistics and retail and e-commerce, so some interesting things. Well, enjoy the rest of the break or the start of the break. Of course, we have tickets still available for tonight, so if you have some colleagues or clients or business partners that would like to join us for the gala, just please talk to one of the girls out front and they'll get you all registered on any extra tickets. And also thank you for joining our 300th Coffee with Craig show today, and you'll get some presents outside as well. Thank you.
Click here to subscribe to the Coffee with Craig show, and don't forget to share it with your friends.